Ladies and gentlemen, welcome to the Financing Social Entrepreneurship session, moderated by Yiorgos Alexopoulos, Senior Researcher for EaSI Social, with the participation of Cristina Almeida, Head of Platform of EaSI, Piet Callens, Head of Finance Department by Hefboom, Elena Avatangelou, Co-founder of Givingstreets, Samuel Close, Senior Investment Officer by the European Investment Fund.
Hello and welcome. I hope you had a good energizer as a break and coffee and the sweets were perfect. So welcome again here. I have the pleasure to have in the panel three inspiring examples of how organizations that focus on supporting social entrepreneurship, social economy and social enterprises, and they will be given the floor to explain how they can also focus on the solution, but also provoke and induce systemic change in what they are doing. So we will start with Cristina Almeida from EaSI, Portugal, and then the floor will be given to Piet Callens from Hefboom, Brussels, and Elena Avatangelou with Givingstreets for a focused solution on cashless donations and how technology can support charities and vulnerable groups. So if you can take the floor and introduce yourself and the organization. Please, Cristina, yes.
Can I have the slides? Okay, thank you. Here. Hello, my name is Cristina. I run the platform at EaSI. So we are a very small team, as you can see on the slide, and we accelerate and invest in solutions that deliver social and environmental outcomes. We were founded by the Callens Foundation in 2013. And very briefly, in a nutshell, what we do, we have an impact venture capital fund. We manage 45 million euros. Our investors are the European Investment Fund, the Callens Foundation, and the other people you can see on the screen. We also have a startup accelerator called EaSI, where we do capacity building for European startups. And we have screened more than 3,000 companies from 50 countries, and we have accelerated 30 companies so far. And in the context of this accelerator, we also run corporate pilots so that startups can test and iterate and scale their solutions. And then finally, we work with the public sector. So this is the area where we were born, where we are most known for running social impact bonds. We have run 5 social impact bonds so far. And we have helped the government structure a 150 million euro fund called Portugal Inovação Social, Social Portugal Innovation, to finance social innovation in Portugal. So the previous panel was very interesting. It's also related to what we do. We use the impact management project framework to assess the impact. And as you can see very quickly on the slide, in the 3 areas of work, acceleration, the fund, and government performance, we cover mostly, we benefit stakeholders and we contribute to solutions, and we're not investing or accelerating in solutions that are avoiding harm. So maybe I will leave the second part for the second part of the discussion.
Thank you very much, Cristina. Piet, please tell us about Hefboom and your initiatives.
Okay, good morning, everybody. Hefboom is a cooperative who is active in impact finance for 35 years. So I'm sorry, Astrid, but we are talking social investing since 35 years. We are a cooperative, as I said, and we have 1,200 shareholders, a fund of 25 million euros. To give you an idea, the money from the investment fund comes for 80% of individuals, only 20% are organizations and companies. What we are doing is corporate finance, impact finance, social and durable economy and sectors. Since 10 years, we also do microfinance, and since, I think, 3 years, yes, we are also doing cultural loans. We have a portfolio of about 26 million euro, and in 2020 we invested 9 million euros. And my name is Piet Callens, and I'm the head of the finance department at Hefboom. Thank you.
Thank you very much, Piet. Elena, you have the floor to explain how a scan at a time can make change.
Thank you very much. And thank you for inviting us and including us in this very interesting and exciting event. I represent Givingstreets, which is a social enterprise enabling cashless donations to homeless people, other vulnerable groups, and charities. It all started 3 years ago. Our idea emerged 3 years ago from personal experience. And actually, we're trying to solve a problem with technology that has come up because of technology. Very often, while walking the streets, we saw homeless people or charity workers collecting donations. And although we were willing to help, to give these people some money, we never had any cash on us anymore. So when we said we don't have any money, we actually didn't have any money to give because more and more we use cash cards or other forms of electronic payments. So what we came up with was the Givingstreets idea, which is an application that the donor has on their mobile phone. And the beneficiaries, all they need to receive donations are a QR code card that we issue for them. So the donor just needs to scan the QR code and make a donation. And then the homeless people can redeem the donations they have collected in affiliated shops or businesses in order to buy something to eat, buy some services like a haircut or have a shower somewhere, sleep for a night, etc. Our solution requires no equipment whatsoever. It's totally cashless and fully transparent. The application itself is very simple and very intuitive to use because our goal was to be the technological equivalent of reaching your hand in your pocket, picking up some spare change and making a donation while on the move. During the 3 years of our existence, we're the proud winners of the Shivas Venture competition for England and Wales. We have also won first place in Alpha Bank's, this is one of the Greek systemic banks, FinQuest competition in 2019. And during the COVID pandemic, we had the privilege to be part of the Visa Innovation Program here in Greece, which gave us a lot of support and knowledge and led to us currently being in a proof of concept phase in collaboration with Praxis, one of the largest charities in Greece supporting homeless people and migrants. As Yiorgos has said, our vision is to change the world one scan at a time, but it's not only that. So there's more for us during the discussion to be said. Thank you very much.
Excellent. Thank you very much, Elena. You say that one of the things that Elena pointed out is that participation in these different acceleration schemes and collaboration with stakeholders. And these awards and this, that pushed you to work better and smarter and accelerate your idea. So coming back to Cristina, the interesting thing about Maze is that you have started your approach by these social enterprise accelerators. And this usually gives more clarity to one of the problems that we face when we are researching social enterprise development. Most of the times, the problem is access to market and not access to finance. So in order to improve possibilities to have a sustainable access to funding solutions, you need to work with the enterprise. So how did you work with that on Maze?
Yes, that's an interesting question because it's exactly where we started. So when we started in 2013, we were only doing impact. We were only doing social impact. Right now, we have a wider definition of impact that also encompasses environment. And so in 2013, when we were most focused on developing the first social impact bond in Portugal, and we were meeting a lot of social organizations that had very valuable interventions in the field. What we discovered, it was very committed teams that had a lot of expertise on the specific social issue that they were addressing. But in terms of business skills, in terms of having a sustainable business model, in terms of having ambitious roadmap to scale their solutions, these organizations were lacking this expertise. So it's very difficult, not to say impossible, to attract investment if you don't have a sustainable and attractive business model, if you don't have an ambitious roadmap to scale your solutions to new markets, if you don't have an organized team. And so that's when we understood that maybe before starting to offer the market investment, we needed to offer these organizations capacity building. And so we started to develop very small accelerators. First, we started in Portugal. We did a few in Lisbon. We did a few in Porto. And really the goal was, okay, we have a social organization with a very, very interesting proposition to address a social issue. And I was listening to Astrid. We have also one Code Academy working in Portugal, working since then, or working with informal caregivers or organizations preventing children and youth at risk from being removed from their families. So we have social workers that have a lot of technical skills. So now let's talk about how to make this a business and make this sustainable. So generally our accelerators, they last 3 to 4 months. We were working with a lot of organizations back then. We did a lot of cohorts during the year. It was smaller at scale. And then eventually by this experience, we understood that good things take time. So currently when we launched MAISEX, which is an European accelerator, so now we're working with organizations all across Europe, we only work with 10 organizations a year. And we do this because working alongside these ventures, and for 4 months we really become part of these teams, it takes a lot of commitment, it takes a lot of work, and it's not something that can be done fast. So it has to be an intervention in depth. And so we start by defining their impact, so defining their metrics and really having a tough conversation on how they can use the impact, social and environmental, they're having to scale their solutions and embed that in their business models. And then we define the goals. Some of the companies want to attract investment, and others want to have a corporate pilot, or others want to open new commercial leads. So it's a customized approach. First, we started with a standardized approach, and we realized it didn't work because social problems are very specific and business can be very different in nature. So now it's a very customized approach. And for each of them, we have a sprint methodology where we work to fulfill those goals by the end of the program. So yeah, I guess our understanding has been that capacity building comes before investment.
Excellent. Thank you, Elena. Cristina, sorry, and Piet. Knowing your field, knowing your customers, knowing the problems is one of the best advantages an intermediary, a financial intermediary like your credit cooperative can have. Can you please tell us more about what you are doing, and if you can use for me, an inspiring example of funding cards and culture in order to go deeper into your work.
Okay, thank you, Yiorgos. So to give you an idea, in 2018 we started with cultural loans. Those cultural loans came after, I think, some research and also some failures before, in Belgium, in Flanders especially, so the Dutch-speaking part of Belgium. Since many years we were looking for a financial instrument special for the cultural sector, and it should have been something, or it should have been something between subsidies and private regular finance, let me say. And due to some research on identifying the needs of the cultural sector, but also measuring the economical impact that is generated by cultural and creative sectors, followed by some trial and error. There used to be 10 years ago a first cultural investment fund that really did not succeed. So we had a lot of lessons learned. We had a lot of things to do it better. Then we started to rethink this instrument of cultural loans. So what is it today? It is a really low threshold loan for organizations and artists, mostly individual artists. And I have to stress this difference because we are doing corporate finance, which means in Belgium and also in other countries that you have to be registered as a company, but you have also small artists who are gaining money due to a professional activity, but are not really a company, are not really registered as a company. So they also have access to that fund. So that was really important when we started the fund. These are loans starting from 5,000 euro up to 250,000 euro, depending on how big you are as a professional or an organization. It is without, so interest-free or with a small interest. We don't ask any collateral, and payback time is 5 years. And the really important thing there is that it is really low threshold. So if you come to us and your business plan or your financial plan is not that good, you can have free assistance from another party, to be clear, so not us as a financier. You can have free assistance to optimize or to make your financial or entrepreneurial plans. And this combination works really well. To give you an idea, 1/3 of the credits we give had some assistance on some or a lot of assistance with their plans, and that made it successful for them to also get this loan. So that's an idea how the instrument is generated and where it comes from.
Excellent. Thank you very much, Piet. Elena, in technology there is usually competition. So how your approach is different from competition? What are the strengths and advantages in working in Givingstreets?
Thank you. We get asked this a lot. Indeed, there are several solutions in the market who are currently available for charities and even for homeless people to receive donations. However, most of them require some kind of equipment on the recipient side. One example is tap and donate boxes, where you need kind of heavy, let's say, equipment. You need a device, something like a POS, where you tap your cash card in order to make the donations. There are some other solutions employing NFC tags. There are several examples. However, they all require something on the side of the recipient. Our solution is different because all the recipient needs is the QR code card, which can be printed on practically anything. It could be a cap, a T-shirt, a small badge, a hat, a poster. It can be printed anywhere and placed anywhere, even on a sticker, in order to enable these recipients to receive donations regardless of their locations, or and to also have an increasing number of these QR codes, so there is no limit in the scalability from our side. Another difference is the fact that from this solution is the fact that we are very flexible in choosing the donation amount. Most solutions have a prefixed amount, so when you tap the card, they automatically, let's say, receive 2 euros, for example. We allow freedom to the donor to choose the donation amount, however small or large they want it to be. And we also provide the redemption option to the homeless person. So The fact that they can use this same QR code card that enables them to receive the donations, they can use it as kind of a cash card of their own in order to purchase goods or services in affiliated businesses. And that's what makes the difference, at least in our minds, the fact that we enable these people to regain some financial freedom that they've lost due to the cashless society that we're living in, and to have control of their finances in a safe way, because they don't have money on them that can be stolen, in a very dignified way. So they have the choice and the safety and the freedom to use their finances again as they like.
And how timely a solution in a social distancing period during COVID. So, Cristina, you have briefly described a couple of solutions of funding, available solutions that you have worked and availed to the ecosystem. One of the most critical points is to find or to channel ventures to the appropriate funding scheme. Which one of these that you have worked you think that is more challenging or can produce more impact?
I mean, it depends on what the ventures or the organizations are looking for, so I wouldn't say that one is better or the other, but it might be helpful to go back to the story of Portugal and how our ecosystem was built and what kind of schemes were created to finance social organizations. Can we go back to the slides, please, of Ms. Cristina Almeida? Thank you. In any case, I can start. Okay, here we are. Okay, so we were created in 2013 by the Callens Gulbenkian Foundation. And back then, there was barely no ecosystem of social innovation in Portugal. And the idea of the Gulbenkian Foundation was to create in Portugal something similar to what Big Society Capital created in the UK. And so what we did together alongside Gulbenkian was to talk to the minister at the time, Avatangelou, for the European EU funds, and we posed a challenge. So the challenge is, how can we create a similar instrument in Portugal? And he accepted the challenge. So alongside the Minister of Social Security, we created the Portugal Social Investment Task Force. And this was a task force with private, public, non-governmental and governmental entities. And we worked throughout 1 year to create a proposal for the European Commission to create a massive vehicle to finance social innovations in Portugal. And so Avatangelou, after this 1 year of work, went to the EU Commission and they said yes. And so in 2015, we launched the social innovation, Portugal Social Innovation, which is a 150 million vehicle of EU funds to finance social innovation in Portugal that has 4 investment vehicles that I will cover later. So in 2016, also because of this, Portugal entered the GSG. And then in 2017, we developed the accelerator programs that I mentioned previously. Then in 2018, we launched the European Accelerator. 2019, we closed the fund. And in 2020, there are 13 social impact bonds in Portugal. So how did this happen and what was the role of this 150 million fund and how does it work? So this vehicle, well, it has 4 vehicles of investing. So the first one is for capacity building. So it has financed already 201 social enterprises. And the idea is that companies can apply up to 50K of services to find intermediaries that can help them for capacity building. Then the second one is a match fund for venture philanthropy. So what the Portugal Social Innovation does is organizations have to find a private investor to fund them, and they will match their funding with very interesting terms for organizations. Then we have the Social Impact Bond Outcome Fund, and that's why we have so many social... Portugal is the 4th country in the world with more social impact bonds right now. And it's mostly because of this vehicle. And so 4.6 million euros were already allocated to social social bonds. And then finally, there is the fund, which is a social innovation fund. So they are investing directly in companies, and they always co-invest. So basically, the company has to attract an investor, and it could be us. We have co-invested with this fund. And then this social innovation fund matches the investment of the first investment, and then we co-lead and we go together. So this was very important to foster a social innovation ecosystem, which was inexistent in 2013. And so what this shows us is what we have learned with this experience. It's four things. The first one is that effective change cannot happen without the intervention of government. So private organizations can do as much impact as they want, but there are some social issues that cannot be tackled without the buy-in of government. And Portugal Social Innovation was a champion, and it still is a champion in Portugal to trigger this change. Then the second learning is that we need champions. And so Portugal Social Innovation is and was huge to foster this ecosystem. We also had a role to play, but this was only possible because the Callens Gulbenkian Foundation decided in 2013 that they wanted to create this ecosystem. So if the Callens Gulbenkian Foundation had not started and mobilized the political actors to go this way, this would not have been possible. We also learned that we have to adapt to local contexts. So social impact bonds are a tool that is delivering very different outcomes in different geographies. And in Portugal specifically, it's helping us to test in a very effective manner what social organizations are doing to deliver better outcomes than what government is doing so far. And this is the value proposition of social impact bonds in Portugal. It's this ability to relocate risk away from social organizations and to test innovative solutions. And then finally, that quick wins are essentials. So either social impact bonds or corporate pilots that we do with big organizations such as BNP Paribas, we need to be able to have quick wins to inform future stakeholders that join this movement that impact investing can actually work and that we can align business and impact and have both financial returns and impactful outcomes at the same time. So this has been our experience.
Very informative. Thank you very much, Cristina. We have seen, Piet, that having authorities engaged at an early stage is critical for the success and development of different solutions. As far as I know, the funding arts and culture, not with grants, is one of the few initiatives that are present here in the European Union, not only in Belgium. So I wonder how you managed to persuade your authorities to engage into such a solution.
Okay, so I think what is needed here is, like I mentioned before, failure. You need some trial of error, some good research, and the most important thing is some political courage. What I mean by that is that in Flanders we had a minister who had the courage to say to the cultural sector, of course we will keep on giving subsidies, but we will launch an instrument that is not subsidies, it's a hybrid form. So we will, as a government or public authority, we will invest in it, but it will be in the principle of investing. So that political courage you need, and you need to explain it to the cultural sector. And it will make it possible to leverage the investment that they are doing. If you're giving subsidies, there is no financial leverage beside economical, etc. So what they wanted is that the private sector would also invest in this instrument. So you really need a mind shift. So how did we do that? If you're funding, you have three, let me say, building blocks. The first building block is the operational part. What I mean is you can compare it best with fund management. So we have a client and he wants us to manage his fund. In this idea, the political part of the government is our client, and we will fund, or we will manage the fund. So the government is paying us for this job. That's the first building block. The second building block is the funding itself. So you need the money to grant the loans. This is a mix. So first there is a part also of the government, so the fund we manage from the government, but besides that there are also private organizations and individuals via Hefboom. So the company I work for, I told you we have 1,200 investors, individuals, companies and organizations. So we are also giving the funding to grant the money. And then the most important thing, and that is really important for the politicians or the government to decide in which way this will have an impact on cultural sectors, and that's the guarantee fund. Yiorgos, you were referring to it. No, we did not use the European instrument. We have some reasons for that, but we used a separate individual local guarantee fund also launched by the government. And these funds means that we can really make a change and really can invest in the cultural sector. This will cost them some money because, to give you an idea, in Belgium the default rate is about 30%. So in the cultural sectors, we are trying to lower that. But they can also, because of this construction, so the different building blocks should be together, are really important to have to work together to make it possible to, for example, the Minister of Culture to score with it, to say after a few years, okay, we invested that amount of money, and due to the guarantee fund also, the fund manager was able to really invest a lot of money in it. So these are the three building blocks you really need to make that change, and also to make it a success for the politicians. As I said, we had some trial and failure. 10 years ago, they tried another way of working with other building blocks, with other parties who carried the risk, and with other speeds and different ways of working, and it didn't succeed. So that's why I think you need this failure to make a better instrument.
I absolutely agree. We can learn so much with failures, not only success stories. So the suggestion will be stop sharing success stories and build on failures. Trial and error and improve. Fail fast, fail better, and improve. And thank you also for giving two ideas, Piet. One is that there is always inspiration from instruments at the European level, but there needs to be an adaptation to regional and local context.
Yeah, that's one of the things we also talked about yesterday. I think it's important to have so much very good instruments on European level. There is a lot of money, there is enough money to do things, but it's important is to lower down to the local, regional situation. And it's always different. Even in Belgium, we have two regions. We have the Dutch-speaking, we have the South French-speaking part. The cultural difference, also economical differences, the way of funding, there are within this one country, there are already big differences. So that's my call to Europe, is please lower down to the local level, understand how it works, and adapt your instruments to the local situation.
And engage organizations, of course, at an earlier stage and not on the launching of such instruments.
Absolutely.
And thanks again for describing very clearly that another way of using public funds and engaging stakeholders is there, and it is working. And this goes for Portugal as well, with the social impact bonds and how you can blend public and private money to increase impact. And another outcome of your work is initiatives like Givingstreets, right? They have a direct focus on vulnerable groups, but you also intend to work with charities and improve their work as well. So, next steps, how do you say that you can go beyond a national context, offer solutions to a broader set of organizations, but at the same time keep the social value that you create?
Well, our vision is to be a global financial inclusion platform. And already we're very happy because we have received expressions of interest from groups similar to ours from Spain and Canada. And also there is one group from the state of California in the USA. So we see that people acknowledge the problem we're trying to solve. They're eager to find a solution that is easily sustainable, and it's very easy to grow globally. As I mentioned before, the fact that we do not depend on any equipment not only makes us a very cheap solution to implement, but it's allowing us to grow globally very easily. So what we need, in essence, is the resources, the human resources that would enable us to reach out to additional markets in terms of business development. Working with charities is the vehicle for us to reach out to the homeless people and other vulnerable groups, because we do not do any street work ourselves. Our vision is not to be a permanent solution for these people. It's to be a first step for them to start regaining their dignity and some financial control. We aspire that at some point through the Givingstreets mechanism, these people could start making some savings and perhaps perform some goal-based funding, raise funds for some personal goal. For example, go back to school, learn a new occupation, get some new skills that would enable them to come back to the society as more active members, because the majority of people who have ended up homeless are not people who chose this lifestyle, as many people believe. It's people who had some tough luck in their life. So Givingstreets aspires to become a mechanism that will enable these people to gain financial control, set goals, and regain their life back. It's a mechanism that will help them become banked while being unbanked, because currently the regulations do not enable these people to have access to financial means. And this is where we step in until they can step on their own feet and be part of the financial society as we all experience it at the moment.
Thank you very much, Elena. I will stick to you because you mentioned resources, networking, and teaming up with other organizations in order to scale your solution. So, if you were to describe the ideal funding from your side, we have impact investors here and we have great organizations. What would be your selection, one, and how do you see that this is technology that is being formed now? Would you team up with regulators as well in order to change how things are being designed and offered?
That's a very interesting question. And I haven't prepared the sales pitch for the funds. If we were to receive funds, that would enable us to scale the solution both on a technological level and on a business development level, as I said. Because what we need is the human capital that would reach out to the world to spread the word on our solution and what this can do. Regulations are a very hot keyword for us. It's actually the current regulatory system is the largest obstacle we faced during the 3 years of our existence, because our idea started in a different way. We were, at the time, we were imagining a solution based on blockchain that would enable us to be our own bank and perform our own, accept the payments on our own. However, we were very young and naive, as they say, and when we started learning more about the regulatory environment, we realized that things are not so simple. Participation at the accelerator programs helped us a lot in that. So any startup that has the chance to participate in such programs, as Cristina mentioned, is a very lucky one. If by some magic wand we had the opportunity to work with regulators and influence things, the way things are done, we would ask for more flexibility in some areas, more trust towards startups that are trying to solve problems in a different way and are currently hindered by regulatory issues because of, okay, it's understandable, it's trust issues, money laundering issues, a lot of problems that the regulations are trying to tackle. But enabling some kind of freedom or flexibility would help us move a lot faster than we have done already.
Thank you very much, because being alternative, it's not anymore being marginal. There are so many experiences out there, so you need to have the power to convene other stakeholders and engage into meaningful discussions. So let me harvest one of the questions from the public for you, Cristina. So does social bonds work in other countries, or Portugal has a special culture that makes them work?
I wish that was the reason. No, it can work in many countries. Portugal is the 4th country in the world that has more SIBs, but other countries do. The first one was the UK. So the social impact bond was in the Peterborough prison. And the idea of that social impact bond was to test an intervention to prevent people that left prisons to commit crimes again. And the interesting thing about social impact bond is because it manages the performance of that intervention, they were able to understand that in the UK, if prisoners left the prison on a Friday, they were way more likely to commit a crime again because it's Friday and maybe their friends were out and maybe they wanted to go out, it depends on the reason why, or they wanted to see their families and they had no way of, I mean, for different reasons, if they left on that day, they would commit the crime again. And from that learning, they were able to embed a better prison service after that. But yes, so the UK is very well known for social impact bonds. Netherlands as well. So if for the person who asked the question, if you want to learn more about that, I recommend going to Social Finance Netherlands, the website, or Social Finance UK, or Brookings. These are the organizations that have been building more knowledge on this front. And as for us specifically, we have managed 5 social impact bonds, and this year we finished 3. So we have already published the reports in Portuguese, and we will launch the reports in English in December. So we're going to be talking a lot about the benefits of this financial instrument and our learnings. So the areas of work where we did the social impact bonds was with Code Academy. So this was to take people of unemployment by teaching them how to code. And then also capacity building for people that are unemployed, and so with another organization. And through this, we were able to help 120 people re-enter the job market. And then we worked in the prevention of children and youth at risk with an organization in Porto to work alongside families to prevent children and youth to be removed from their families and into foster care. Because once children get into foster care, the likelihood of having a very difficult life afterwards is very serious. And by this intervention, we were able to prevent around 100 children and youth at risk to being removed from their families, also through a social impact bond. And so, yes.
Perfect. Thank you, Cristina. And the final question for you, Piet. Being part of networks such as FEBEA or other credit cooperatives that you're part with your organization is another way to increase the impact, okay, by peer learning, by duplicating your approaches, and by informing other partners of what works and how it works and what does not work and why it does not work. So if you were to select 3 do's or don'ts to support our general organizers here, or to advise the regional governor of Thessaloniki on how to use this period, the available public funding, in order to produce solutions, what would be your ideas?
Yeah, okay, I will try to translate it in key success factors. So like I already said, it must be a local instrument. So you really have to do research on a specific sector. You have to do research on financial impact, but keep it local. So that it's really important. Then another important player in this game is the partner we work with for the coaching, for the consultancy. This should be low threshold. Also in the past we had some initiatives of consultancy specialized in cultural and creative sector. The result was that they only were active in creative sector, so the more commercial part, because they had the money to pay consultants. So this should be, I'm not saying that it should be free, but at least the threshold should be very, very low. Another important thing, and I did not yet mention it, is that you need a good agreement with your political party or with the government or your client. In Belgium, you have systems of 4 or 6 years of policy, and then it changes. As an investment fund, as you all know, that's not enough. You need 10 years and even more. So this is also very important to have. And maybe that's a smaller part, but also very important. You need some partners in crime. This is a story started 10 years ago. It needs to grow. You need to find people of the same idea within the sector, within politics. Besides that, so you have to make a kind of a network before it starts. So that's also very important to do. And in the story I said the difficulty is in the construction of the 3 building blocks. As I said, you have the operational part, you have the funding part, and you have the guarantee part. And you cannot leave one of the buildings out of this build blocks out of this construction. It must be together, and it must be adapted, and it must interact with each other. One of the things, for example, we needed is that the government was not only giving the guarantee, but also was an investor. That makes it possible for us that the government doesn't push us to take more risk, but because they will also be the victim of that. And on the other side, it didn't force us, or it didn't, how do I say, it's not able for us to be very defensive or very lazy. So it's important that we also invest. So this, how do you say it, equilibre, the balance, sorry, is really important. So I think these are maybe I want to add something else. Yeah, I'm sorry, Yiorgos, but you know, the name of this conference is the Alternative Finance Forum. In Flanders, we are leaving the term alternative. We are calling it an additional form of finance, because we are not competing with subsidies. We are not competing with regular banks, commercial banks. So it's very important that you are in between it or beside it, whatever. In our products, it's very important that the client or the applicant shows us that he has no access to regular bank finance. So we are not competing with the market. So that's why we see it not as an alternative, but as an additional form of finance. So this is also an important mind shift.
You indicate very well that not distorting competition, not distorting the market, it's pretty important. And learning, it's a learning process, steep at the beginning, but it has very, very, very interesting results. It's very important in all your organizations. So thank you very much for this interesting discussion. You have any last words that you would like to share with our audience here or online? Please do.
If I were to share some words of wisdom to fellow startups or people who have some ideas, would be to follow your vision, follow your dream, be open to learn, to change, and hopefully this will lead to a marketable solution that can make an impact in the world. At least that's what we're trying to do.
Thank you very much.